नमस्ते सभी को स्वागत किया है मेरे यूट्यूब चैनल से। और आज आप लोगों के साथ डिस्कस करेंगे HDFC बैंक शेयर्स के बारे में। और HDFC बैंक शेयर्स टैंक 6% in 5 straight sessions. Should investor buy this dip? और अभी डिस्कस करेंगे आप लोगों के साथ शेयर ऑफ इंडियाज लार्जेस्ट प्राइवेट सेक्टर लेंडर HDFC Bank declined as much as 1% to an intraday low of rest 938 on Friday, January 9, extending their losing streak to a straight fifth session. The stock has set 6% over this period, ahead of the bank's third quarter earning announcement scheduled for January 17. HDFC Bank stock is showing a clear bearish structure on the daily chart, with price trading below all key EMAs 20, 50, 100 and 20, indicating weakness across all time frames. Akash Shah, technical research analyst at the Choice Equity Broking, told ET Markets. The breakdown from the RES 1000 to 1220 resistance zone has triggered strong selling pressure, lending to lower high and lower low. Bearish candle supported by higher volume points toward a distribution rather than a healthy correction. Momentum remains weak, the RSI below the midlines signaling lack of bullish trends. The rest 940 to rest 935 zone is acting as immediate support at a break below could lead to further downside toward rest 900 rest 885. Overall, base the remain bearish unless key EMAs are reclaims occurs at it. Issuing the view Hestel Bhuba of LKP Securities said the RSI has entered a bearish crosswire and placed near 20, indicating an oversold condition. Immediate support is seen in the RS 935 to 940 zone, from where a short-term recovery cannot be ruled out. However, failure to hold this support may lead to further downside toward the rest 900, aligning with the 100 EMA on the weekly chart. As long as the stock trade below the 20 EMA, selling pressure may persist, with rest 965 acting as key resistance. December quarter performance points to steady balance sheet expansion, with the brokerage flagging a mix near-term outlook and the margins that may meet moderating yield. Even as asset equality and cost disciplines remain supportive, management has indicated the most of the asset side reporting is now behind, and the NIMs are expected to benefit from the downward repricings of term deposit, with rate cut already reflecting in saving account rates. Axis Security says HDFC Bank has remained largely as track with guidance it is work toward a reversing to par merger level across key metrics underpins by strong equation capabilities. The brokerage has assigns a target price of res 1,170 per share, an upside of 23.5% from current level. With the loan to deposit ratio now below 100%, the bank is likely to the accelerated growth in financial year 2026 to align with system-wide trend. A further pickup in growth in financial year 2017 alongside the sustained deposit mobilization should help bring the LDR down to sub 90%. Margin pressure seen in HI expected to else in H2, supported by deposit repricing and the impact of CRR cut on exit margin. Increased equities with price target of Rs 1,180 per share says the margins are expected to touch at level better than earlier anticipated, which together which began assist quality strain and sustains deposit growth momentum that should support the re-rating of the stock in the coming month. According to ES Security, the bank is the likely to report sequentially loan growth in the 12.5% range. Net interest income (NI) growth is expected to trail loan growth marginally as the decline in the yield on advance is seen outpacing the reduction on cost deposit. As a result, net interest margin are likely to soften sequentially on the positive fee income growth is expected to outpace loan growth. Operating expense growth should remain lower than overall business growth and assist quality strain are likely to improve sequentially. Slavex and the probation are both expected to decline on a quarter basis aided by seasonality. Share of HDFC Bank rose about 12% in 2025. Thank you.